Yeah, hi. I am Krishna Sanghvi, the Chief Investment Officer for Equities at the Mahindra Manulife Mutual Fund. Yeah, today I would like to talk to you about our new NFO which we're launching, Mahindra Manulife Flexi Cap Yojana. As the name suggests, Flexi Cap, the Mahindra Manulife Flexi Cap Yojana is all about investing across market capitalization. The fund will be extremely flexible in investing in the right mix of large cap, multi cap, and small cap companies in individual and in totality. Very theoretically, the fund can actually have a 0% large cap, 0% mid cap, and entire 100% small cap, or 100% mid cap or 100% large cap, or any multiple combinations thereof. So that the fund actually gives you a flexibility to really invest across the market capitalization. Yes, definitely, the fund manager has the decision making role to play in terms of what he or she likes to invest in at various points of time, and that's going to be a combination of both bottom up stock ideas which really look good from an investment perspective, and some sort of an understanding of the broad market trends of large cap, mid cap, and small cap, as to which segment is likely to do better based on the economy, and maybe little bit concerns about valuations being added as a part of portfolio construct. The fund, the objective clearly is to invest in quality companies which are spread across the market capitalization. We buy good quality companies which are likely to create wealth for our investors, and at the same time we will keep on adjusting our weights to large cap, mid cap, small cap as a segment based on where we understand the economic cycle is, based on what we understand the relative valuations lie in terms of growth. So it's the objective is clear: pick better stocks, and then reconstruct the portfolio, or reorganize the portfolio on the right set of weights for every stock, and the basic preference for market capitalizations. Yeah, essentially it's an equity fund, with the fund can actually go all the way to 100% equity. What we intend to do is that after the initial time period of deployment of the NFO money goes through, which is maybe 2 months, 3 months kind of time frame, the fund will very broadly be remain invested 90% to 100% range in equity assets. As I was mentioning, it'll be a chosen mix of good quality companies which we like in terms of as an investment idea. Those companies which have a basic characteristics of growth, cash flow, management, and valuation. These four key variables is what we track. As we know, every business is here for growth. Growth can come from multiple variables. Growth can come from easiest way to grow is find a new customer. Maybe different way is to add a better product to the same customer, or charge a higher price for the same product. I think it's a combination of everything. There will be a volume growth because of market expansion. There will be value mix improvement because of better quality product and a better price point. That's typically gives the growth profile for a company. Look at cash flow. The second variable which we track really tries to understand what sort of profitability every company runs. What are the cash generating and cash deployment methods a company uses. In an ideal world, we would like to invest in a companies where there is a inherent ability of the company to finance its future growth by way of the cash generation by the business itself. With the idea is simple: there is a company doing reasonably well, and if it's able to generate cash flow for itself and deploy that cash in growth by way of setting up a new unit or a new expansion, new factory, etc. And as long as it's a self-funded, it can be a very good virtuous cycle for that company. Is a cash flow way of evaluating it. Third is the management. Management in every company which we track is typically track on two parameters. One is the management intent, management corporate governance track record. Past actions undertaken by the management is what we track, which gives us some comfort about where the management is placed on the qualitative assessment of corporate governance. Second variable is really the past track record of delivery of performance. Out here, what the company has done or what the management has done in last maybe 2, 3, 5 years, or maybe longer period, depending on the kind of industry, kind of business we are looking at, is a variable which we track. So a combination of both the qualitative way of assessing management action as well as the quantitative way of analyzing management's past track record. That gives us a good combination of how to rate a company on a management dynamics. Fourth is clearly valuation. As the saying goes, value lies in the eye of the beholder. So to an extent, yes, that's where the art of investing or the art of valuing a company comes in. Based on our own internal analysis spread over fund managers as well as analyst team, we do arrive at some sort of a broad valuation range for various companies which we are tracking. And moment we get our own valuation zone for a company, we actually compare it with the market price which is traded or available on the exchange, and that actually gives us a clarity that okay, this company is something where I will possibly be investing with my desired valuation target being achieved vis-a-vis the current price. That's typically the valuation gap, which because in any combination when we look at a company, there will be an ideal stock price traded and there will be a price which maybe our own analysis indicates based on our own understanding of GCMB framework, and then we look at whether is there any trigger, any reason to buy that. There are a lot of companies when the value is there in place, but we need a catalyst. A catalyst can be anything, can be government policy action, can be a corporate action, can be some change in regulatory dynamics, etc., or the market condition in terms of the business market, not the stock markets, but the business condition for that particular industry or the company. So we look at all these variables, and then that's a broad way of analyzing and investing a company. The last part of this entire exercise is going to be portfolio construction. It's one thing to identify companies which looks good, one thing to analyze the value, other is to how to create it as a part of portfolio. Whether the same company deserves a 2% weight or a 5% weight in the portfolio at this price point is what honestly we look at. So that's going to be the combination broadly of how we looking at investing the funds and managing this portfolio going ahead. I think from an investor class perspective, what I would recommend is that investors who have, first of all, a willingness to invest in equity assets, because primary, let's not forget, it's an equity asset which carries its own risk reward equation. So that is one. A second is a time frame. I will recommend that investors look at this fund with an investment objective which is not really short term. So I'll say please invest with a 2-3 year time frame to really allow the investments to be made, investments to grow, and investments to possibly deliver value to the investors. These are the two primary things I would possibly say. Yes, clearly there are ways of investing, and there is always a lump sum, there is always a SIP, which is a systematic way of investing, systematic way of buying. I think those combinations are always going to play out for every investor, and that is something time and again is proven that SIP is perhaps the ideal way to invest in a company and basically invest in a fund, and then let the fund keep on accumulating the right side of stocks, right side of strategies. This is what I will say. Yeah, clearly the investor should also have in mind that he is not focused on the one particular market cap style of investing. There are investors which are looking only at large cap, only at mid cap, only at small cap. I think for those kind of investors, they will possibly end up seeing a common portfolio of large, mid, small. So they are the investors, I believe, should be ready to accept a portfolio change from a market capitalization perspective. And again, they are the right set of investors for this fund. See, as far as the fund is concerned, the fund is clearly set up under a trustee structure, so there is no tax liability for the fund per se. So any investments which we do in the fund, as of now, the current regulation says that those profits or dividend income, etc., are tax exempt. As far as the investors are concerned, yes, clearly it lies on the investors. The definition of long-term, short-term is defined by the union government through its budget. So currently, any investment horizon of less than 12 months will be deemed as a short-term capital gain, and anything more than 12 months of holding period will be a long-term investment for the purpose from a taxation perspective. So friends, we welcome you all to participate in this NFO, Mahindra Manulife Flexi Cap Yojana. The NFO opens on 30th July 2021 and NFO closes on 13th of August 2021. and fund obviously will be available for repurchase somewhere on 25th August onwards. uh, Stay healthy, stay invested, and create wealth for yourself. Finally, is what our mantra is. Wish you all the best and look forward to your support. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.